Two of the world's bad actors, Russia and Syria, are again causing chaos, and the Speaker of the House of Representatives will resign at the end of his term. Will the markets adjust to Syria and Ryan's surprises? Inflation continues to increase as crude oil is now at a 4-year high. Does this increase our portfolio's volatility? The energy sector offers hope on the relative rotation graph and announcing our first webinar. Do you know what's in your portfolio? If you don't, you should. If you want to know, we can help. Here's what's moving the markets and your money. I'm Charles Brown. It's Thursday, April 12th, and this is CB3 on 3.
At CB3 Financial Group, we don't just manage your assets, we become one of them.
Before I bring you today's news moving our portfolios, we're pleased to announce our first ever interactive webinar. Many of you contact me between episodes of CB3 on 3 asking questions on matters I don't have time to cover during my weekly program. Now you'll be able to learn about topics that interest you and ask me questions in real time, as well as hear other viewers' questions too. More details soon. In political influences, President Trump and Moscow in recent days have traded threats over the Syria strikes, raising the prospect of a clash between the U.S. and Russian military forces in the war-torn country of Syria. After indicating that a strike against the Syrian regime is imminent, Mr. Trump appeared to tone down that rhetoric just a bit, saying in a recent tweet, "I never said when an attack on Syria would take place." The second big political news, though, is that House Speaker Paul Ryan announced yesterday that he won't seek re-election in November. Now, Ryan has had an uneasy relationship with President Trump since the early days of Mr. Trump's campaign. What's the real concern here? Democrats have erased larger GOP margins from the 2016 election in both state and federal special elections, and now Republicans could lose the seat held by Paul Ryan. He's held that since 1998, despite the overwhelming majority of U.S. counties won by Republicans in 2016. Here's my take on the political implications for our investments. As you know from watching my weekly program, stock market movements are comprised of political, fundamental, and technical influences. Certainly, we have been barraged with the headline seesaw since New Year's Day, not the least of which is the Mueller investigation into Donald Trump's personal life. Let's face it, the Obama administration was like watching Driving Miss Daisy. The Trump administration is like watching The Terminator. Yet what should and ultimately does drive the stock market is corporate profits. With the first quarter earnings to begin tomorrow, and with expectations very high for great reports for the S&P 500, we will see just how much influence these political events are really causing. We at CB3 think stock market participants are overreacting to those current influences, which is why our CB3 programs remain fully invested at this time. In fundamental influences, all signs point to a firming inflation landscape. The Federal Reserve officials agree that a development could take place that affects how much they raise interest rates in the coming years. Currently, they're set to raise rates about 3 times this year. At their meeting last month, policymakers said they're increasingly confident that their inflation target of 2% will be hit. They also believe that the economy would run hot or grow faster than its sustainable rate for the next few years. Here's my take on the fundamental implications for our investments. If you look at this chart I have on the screen right now, you'll see that there is indeed a modest spike in annualized CPI, or the Consumer Price Index. That said, we have had virtually no inflation risk since the financial crash in 2008, a decade ago. The Fed's target for 2% annual inflation has been missed in the last 2 years, yet it appears that it will be achieved in 2018. Folks, 2% annualized inflation would be welcomed by us here at CB3, as that is a stable rate that should not negatively affect our investments. In technical influences, sector leadership in the S&P 500 is what we call paused. That's a nice way of saying nobody's leading. You can see that there is no strong sector at this time. And when that is the case, then we look to the improving quadrant on the left in blue for trading ideas. There you can see energy moving northeast, as we call it, which is the preferred direction. Energy is poised to enter the leading quadrant. As we look for new stocks to buy, energy will likely be our favorite sector for ideas. Crude oil hit a 4-year high yesterday, which strengthens the energy sector's prominence. And that's CB3 on 3 for Thursday, April 12th. What's in your portfolio? If you don't know, you should. If you want to know, we can help, and that's why we'll be holding our first webinar next month. Stay tuned for more details on that. I'm Charles Brown at CB3 Financial Group. We don't just manage your assets, we become one of them.